Hello, thank you for joining me today. Today we're going to be talking about the HR1 or the Big Beautiful Bill and how it can impact your personal and business taxes. So before we go any further, let me introduce myself. My name is Karen Duran. I've been a CPA for 13 years and my husband and I own Seed Horizon Strategies, where we focus on helping business owners with back-end tasks like bookkeeping, accounting, taxes, website development, and marketing so that the business owner can focus on what they do best. So what is the HR1? The HR1, or better known as the Big Beautiful Bill, it's a sweeping piece of legislation. It brings a seismic shift to the tax code and it can significantly change your business and personal taxes. This is why it's very important that we talk about it today. Before we go any further, allow me to give you a disclaimer. This presentation is designed to share non-political, unbiased information for you as an individual or business owner. It presents only facts without opinion or commentary. Truth is, regardless of how you feel about the bill, it's going to affect us all equally. Additionally, you are encouraged to conduct your own research and check with your tax preparer, or if you want to hire me as your tax preparer and tax professional, I'm available for you. All right, so today we're going to talk about what is changing for everyone in general. Then we're going to be talking about what's changing for individuals specifically. And lastly, we're going to finish with what's changing for business owners. So let's go into what's changing for everyone. All right, so we have the child tax credit, which is now going to be expanded from $2,000 to $2,200 starting in tax year 2025. We also have an adoption credit that will now have a portion that's refundable. For those of you who don't know what that means, it means that even if you have a zero tax liability, you will have some of that credit refunded to you instead of being applied to your taxable income and lowering it down. Now, we've all heard about no tax on tips. What that really means is that now taxpayers can deduct up to $25,000 received in tips from their taxable income. They can exclude that from their taxable income. Additionally, we have an overtime deduction that allows taxpayers to exclude up to $12,500 of overtime wages from their income tax. We now have an expanded senior deduction. Taxpayers who are 65 years or older can now claim an additional $6,000 deduction from their income. That's per person. So if you have a couple who are both 65 years or older, they have a $12,000 deduction that they can claim to lower down their income tax. This does phase out at over $75,000 a year, so taxpayers who make more than $75,000 a year single or $150,000 if you're a couple will have a reduced benefit. Now, the current tax brackets that we have right now are going to be retained. They were set to expire in 2025, but they are going to be retained, so our tax brackets for the foreseeable future range between 10% and 37% for high income earners. Our standard deductions are also going to update between $15,750 for individuals up to $31,500 for married filing jointly. These are set to adjust for inflation annually, so make sure you are keeping up to date with the amounts every year. Lastly, we have an expanded 529 account benefit. Historically, you've only been able to use the 529 account funds to pay for higher education expenses such as college and university. However, starting this year, you have an expanded benefit where you can use the 529 account funds to fund things like K through 12 education, apprenticeship programs, trade schools, and other things. All right, let's go into what's changing for individuals specifically. One of the major changes that's happening with the Big Beautiful Bill is we have an increased cap of the state and local income tax. So currently the cap for state and local income tax deduction is $10,000, but the Big Beautiful Bill expands it to up to $40,000 for the next 5 years. It's set to go back to $10,000 in 2030. Now this does phase out for taxpayers making more than $500,000 a year, so make sure you're consulting your tax professional. So how can you maximize this benefit? The state and local tax deduction is only available if you itemize your deductions. So make sure your tax professional is making that calculation to make sure that the itemized deductions are gonna bring a bigger benefit for you than just claiming the standard deduction. The next major shift that we have is the US assembled car loan interest deduction. What that means is the government is trying to incentivize US car purchases, so they are allowing you to claim an interest credit if you purchase a car that has been assembled in the US. The maximum deduction amount is $10,000 And so the way you can claim this is by choosing a US assembled model, keeping all your records of your loans and your tax records so that you can claim the deduction. There are certain eligibility criteria. The car has to be for personal use only, and it has to be under a certain weight class and several other things. So make sure you are checking with your tax preparer to make sure that you are purchasing a vehicle that qualifies for this credit. Another thing that is introduced in the Big Beautiful Bill is the Trump accounts, which are saving accounts for children under 18. So what it is that the Trump accounts allow you to contribute as a parent up to $5,000 to an investment account for your children under 18. Funds are invested in diversified index funds of US stocks and grow tax deferred. So how can you benefit from this provision? You can open an account early so you can let the contributions grow, and you can contribute the maximum amount allowed each year, which are the $5,000. Additionally, the government is offering a $1,000 federal bonus for eligible children. This would be children who are born between 2025 and 2028. We also have an above-the-line deduction for charitable donations. Historically, if you wanted to deduct a charitable donation, you had to itemize your deductions in order to do that. However, with the Big Beautiful Bill, it introduces a $1,000 deduction for single taxpayers or $2,000 deduction for taxpayers who file married filing jointly, so they don't have to itemize the deductions to claim the charitable donation deduction. So how can you benefit from this provision? You can donate up to the deductible amount to qualified charities, and that allows you to reduce your taxable income even if you don't itemize your deduction. Make sure that you're keeping all your records for tax purposes in case the IRS has any questions about it. Lastly, we have some expiring energy credits. Several popular energy-related credits are expiring, such as solar panel credits, residential energy efficient upgrade credits, and the clean vehicle incentives. So those are being phased out and terminated over the next 2 years. If you're planning on doing any energy upgrade to your home or purchasing a qualifying vehicle, make sure that you act now and you do those transactions before the credits are set to expire. All right, now let's go into what's changing for business owners specifically. So we have a permanent qualified business income deduction. That deduction was set to expire in 2025, but the Big Beautiful Bill permanently codifies it into the tax code. So what that means is pass-through businesses such as sole proprietorships and S corporations can now permanently deduct up to 20% of their qualified business income. The Big Beautiful Bill also introduces a new minimum of $400. So that means even if you did not qualify for the QBI deduction before, you now have a new minimum of $400 that you would be able to claim even if you didn't qualify otherwise. So how can you benefit? You can carefully manage your qualified income so that you can stay within qualifying thresholds so you can lock in the full benefit of the QBI deduction. We now have the expanded research and development deductions, which now includes software development and favors domestic expenditures. Historically, to expense software development costs, you had to depreciate them over a certain period of time. However, now with the Big Beautiful Bill, you can now expense those costs in the year that were incurred. Additionally, if you want to hire a software developer and you do it outside of the US, you will not be able to take the full deduction. However, if you shift your work back onshore, you will be able to benefit more from the R&D deduction. Now, you would be surprised what qualifies for R&D deduction. A lot of businesses don't think that they have qualifying expenditures. However, things like testing new methods of delivering services, or implementing innovative workflow processes, or developing an app for your company all qualify for R&D deductions. So make sure you are checking with your tax professional to make sure that every expense that you have that qualifies for the deduction is being accounted for properly. We also have an increased Section 179 depreciation cap. Section 179 allows you to depreciate items that you purchase for your business in the year that you incurred the purchase instead of having to depreciate them over a period of time. That includes things like computer equipment, furniture, cars that you purchase for your business use, etc. With the Big Beautiful Bill, that cap is raised to $2.5 million a year. So how can you benefit from this? You want to strategically time your large investments and purchases during profitable years so you can reduce that taxable income in that year. This benefit is now applicable retroactively, so if you had any expenses that you were unable to fully depreciate in 2022, 2023, or 2024, you can now apply this benefit retroactively to those years. Additionally, we have now increased information reporting thresholds. Historically, if you paid a subcontractor $600 or more during a tax year, you had to send them a 1099. However, now with the Big Beautiful Bill, we have reporting thresholds that are $2,000 or more during a year. How can this benefit you? When you streamline payment practices, you can reduce unnecessary 1099 filings while still maintaining clean, compliant records for audit protection. Lastly, we also have increased employer-provided benefits. What this means is the Big Beautiful Bill either introduces or expands employer-provided benefits that you can use to reduce your taxable income as a business owner while attracting and retaining top talent. These are things like paid family leave, student loan payments, Trump account contributions, dependent care assistance, and more. You can provide these benefits to your employees while reducing your taxable income. And that brings us to the end of the presentation. As mentioned before, make sure that you're consulting with your tax professional to make sure that you're maximizing all the benefits. Now, if you would like to consult with me or have me be your tax professional, I'd be happy to help. My contact information is on the slide. Thank you so much.